Welcome once again to our commerce classroom. In this session, we will discuss about consolidation of financial statements. Here we discuss about pre-acquisition profit and post-acquisition profit. Pre-acquisition profit, we call it capital profit, and post-acquisition profit, we call it revenue profit. In some cases, the date of preparation of consolidated financial statements and the date of acquisition of shares by holding company in the subsidiary company may be different. Any profit or reserve standing in the balance sheet of subsidiary company on the date of acquisition of shares by holding company in the subsidiary company is called capital profits. I repeat, any profit or reserve standing in the balance sheet of the subsidiary company on the date of acquisition of shares by holding company in the subsidiary company is called capital profits. Profit and reserves earned subsequent to the date of acquisition of shares can be considered as revenue profits. Profit and reserves earned subsequent to the date of acquisition of shares by holding company in the subsidiary company can be considered as revenue profits. Here we discuss about how we treat this capital profit and revenue profit at the time of computation of non-controlling interest and at the time of computation of goodwill or capital reserve. Firstly, we discuss about the treatment of capital profit and revenue profit at the time of computation of NCI, non-controlling interest. For the computation of NCI, non-controlling interest, firstly we take paid up value of shares held by outsiders. To that paid up value of shares held by outsiders, we add proportionate share of capital profit and proportionate share of revenue profit for outsiders. Then we get non-controlling interest. I repeat, for computation of NCI, firstly we take paid up value of shares held by outsiders. To that paid up value of shares held by outsiders, we add proportionate share in capital profit and proportionate share in revenue profit of outsiders. Then we get non-controlling interest. Then secondly, treatment of capital profit and revenue profit at the time of computation of goodwill or capital reserve. We compute goodwill or capital reserve on the date of acquisition of shares by holding company in the subsidiary company. So, we consider only capital profit for the computation of goodwill. I repeat, all of you know that we compute goodwill or capital reserve on the date of acquisition of shares by holding company in the subsidiary company. So, we consider only capital profit for the computation of goodwill. Then for the computation of goodwill, we know goodwill or capital reserve is equal to purchase consideration minus proportionate net assets on the date of acquisition. I repeat, goodwill or capital reserve is equal to purchase consideration minus proportionate net assets on the date of acquisition. Then proportionate net assets on the date of acquisition, we compute it by adding paid up value of shares held by holding company and proportionate share of capital profit of subsidiary company. By adding these two, paid up value of shares held by holding company in the subsidiary company and proportionate share of capital profit of subsidiary company, we get proportionate net assets. Goodwill or capital reserve is equal to purchase consideration minus proportionate net assets on the date of acquisition. Then computation of reserve and surplus in consolidated balance sheet. Reserve and surplus of holding company. To that reserve and surplus, we add holding company share in revenue profit of subsidiary company. Then we get the total reserve and surplus we have to show in the consolidated balance sheet. Here we have one problem. Balance sheet of X Limited. Here X Limited is holding company and Y Limited is subsidiary company is given below. Prepare consolidated balance sheet. Balance sheet as on 31st December 2019. Here we have X Limited and Y Limited. Equity and liabilities, shareholders fund. Equity shares are rupees 10 each. For X Limited 4 lakh and then for Y Limited 2 lakh. Reserve and surplus. General reserve for X Limited 40,000, for Y Limited 20,000. Profit and loss for X Limited 40,000. Y Limited 16,000. Then current liabilities for X Limited 20,000 and for Y Limited 16,000. Then total of equity and liability X Limited 5 lakh, Y Limited 2 lakh 52,000. Then assets, non-current assets, fixed assets, no amount shown. Investments 16,000 shares at the rate of rupees 10 in Y Limited. In X Limited 2 lakh 60,000. Then current assets X Limited 2 lakh 40,000, Y Limited 2 lakh 52,000. Then total assets X Limited 5 lakh, Y Limited 2 lakh 52,000. X Limited acquired shares in Y Limited on 1st January 2019. Here our balance sheet date 31st December 2019. Here X Limited acquired shares in Y Limited on 1st January 2019. On that date, Y Limited had a credit balance in profit and loss account rupees 4,000 and in general reserve rupees 12,000. On the date of acquisition of shares, Y Limited had a balance in profit and loss account rupees 4,000 and in general reserve rupees 12,000. We know this 4,000 and this 12,000. Our P&L balance 4,000 on 1st January 2019 and general reserve on 1st January 2019 12,000. These two amounts are our capital profits. Then solution, number of shares in Y Limited 20,000 shares. X Limited hold 16,000 shares in Y Limited. So 16,000 divided by 20,000 into 100, that comes to 80%. 80% shares in the subsidiary Y Limited are held by holding company X Limited. Then 4,000 divided by 20,000 into 100, that comes to 20%. So we can say that 20% shares in Y Limited are held by outsiders. Then computation of capital profit of Y Limited. We know capital profit is the profit on the date of acquisition. Profit and loss 1/1/2019 4,000. General reserve 1/1/2019 12,000. Total of capital profit 4,000 plus 12,000, that comes to 16,000. So capital profit of Y Limited is equal to 16,000. X Limited's share in capital profit of Y Limited 16,000 into 80%, that comes to rupees 12,800. Outside a share in the capital profit of Y Limited 16,000 into 20%, that is equal to rupees 3,200. X Limited's share in capital profit 12,800 and outsiders share in capital profit 3,200. Then computation of revenue profit of Y Limited. We know revenue profit is the profit earned after acquisition of shares by holding company in the subsidiary company. Here profit and loss account balance on 31st December 2019 given in our question in our balance sheet of Y Limited 16,000. From that 16,000 we deduct profit and loss account balance on 1/1/2019, that amount 4,000. 16,000 minus 4,000, that comes to 12,000. Then general reserve on 31st December 2019 20,000. From that 20,000 we deduct general reserve on 1/1/2019, that amount 12,000. Then 20,000 minus 12,000, that comes to 8,000. So our total of revenue profit from P&L accounts we got 12,000 and from general reserve we got 8,000. 12,000 plus 8,000, that comes to 20,000. Total of revenue profit 20,000. Then X Limited's share on revenue profit. X Limited hold 80% shares in Y Limited. So 20,000 into 80%, that comes to rupees 16,000. Then outsiders share in revenue profit. Outsiders held 20% shares in Y Limited. So 20,000 into 20%, that comes to 4,000. Then we compute non-controlling interest. We know 20% shares are held by outsiders. Paid up value shares held by outsiders. Share capital of Y Limited 2 lakh into 20%, that is equal to 40,000. Then add share in capital profit, we already calculated it 3,200. Then add share in revenue profit, we already calculated it 4,000. Then NCI is equal to 40,000 plus 3,200 plus 4,000, that comes to 47,200. Non-controlling interest 47,200. Then we compute goodwill or capital reserve. We know goodwill is equal to purchase consideration minus proportionate net assets on the date of acquisition 1/1/2019. Here purchase consideration is equal to 2,60,000. On the asset side of the balance sheet, investments in 16,000 shares of Y Limited, that amount comes to 2,60,000. That is what our purchase consideration 2,60,000. Then we calculate proportionate net assets. Paid up value shares held by X Limited in Y Limited, 16,000 shares at the rate of rupees 10. Then paid up value shares, that amount comes to 1,60,000. Then add share in capital profit of Y Limited. We already calculated that amount 12,800. Then proportionate net assets 1,60,000 plus 12,800, that comes to 1,72,800. 1,72,800. Goodwill is equal to purchase consideration minus proportionate net assets 2,60,000 minus 1,72,800, that is equal to 87,200. Goodwill rupees 87,200. Then I show you here what are the adjustments we have to do in the balance sheet of X Limited and Y Limited at the time of preparation of consolidated balance sheet. This is the balance sheet of X Limited and Y Limited. Here, first of all, we have to eliminate investments in the shares of Y Limited, 16,000 shares at the rate of rupees 10. In Y Limited, 2,60,000. First of all, we have to eliminate that investment from the books of X Limited. Then we eliminate share capital of Y Limited 2 lakh, and then general reserve 20,000 and profit and loss account 16,000 from the liability side of balance sheet of Y Limited. Then in the consolidated balance sheet, shareholders fund equity shares, that comes to rupees 4 lakh only. Then reserve and surplus, X Limited's general reserve 40,000, X Limited's profit and loss account 40,000, 40,000 plus 40,000, that comes to 80,000. To that 80,000 we have to add X Limited holding company's share in the revenue profit of Y Limited subsidiary company 16,000. We already calculated that amount. So reserve and surplus in the consolidated balance sheet, that comes to 40,000 plus 40,000 plus 16,000, that is equal to 96,000. Then we saw non-controlling interest in the equity and liability of consolidated balance sheet of X Limited and Y Limited. NCI we already calculated 47,200. Then current liabilities, X Limited's current liability 20,000 and Y Limited's current liability 16,000. We add these two amounts. Then current liabilities in the consolidated balance sheet, that comes to 36,000. Then on the assets, here we have a goodwill. We already calculated that figure. Goodwill 87,200. We show 87,200 in the consolidated balance sheet. Then current assets, X Limited 2,40,000, Y Limited 2,52,000. We add these two amounts, 2,40,000 plus 2,52,000. Then we get 4,92,000. These are the adjustments we have to do in the balance sheet of X Limited and Y Limited at the time of preparation of consolidated balance sheet. Then consolidated balance sheet of X Limited and its subsidiary Y Limited as on 31st December 2019. Equity and liabilities, shareholders fund equity shares of rupees 10 each, 4 lakh. Reserve and surplus 96,000, non-controlling interest 47,200, current liabilities 36,000, total of equity and liabilities, that comes to 5,79,200. 5,79,200. Then on assets, here we have goodwill 87,200, then current assets 4,92,000, then total of assets 5,59,200. This is what the consolidated balance sheet of X Limited and its subsidiary Y Limited on 31st December 2019. I think the adjustments discussed and the problem solved here is clear for all of you. We will meet again. Till then, goodbye.